Hey guys, Joel Frank here, market analyst at YouTrading, and today we're going to be taking a look at the US dollar. Now, as you can see here, this chart that I've got up on the screen is these are 4-hour candlesticks, and pretty much since the end of March, all the way through the month of April, the dollar was in a pretty strong bear trend, really. It started the month in the mid 9300s. In the last day of the month, it actually had quite a good day and managed to recover back to the north of the 91 handle. But just before the end of the month, it hit lows under 90 spot 50. So not really a good month for the dollar, as seen here in the dollar index. But yes, looking at the dollar over a shorter term perspective, you can see this bearish trend has kind of been broken. And it looks as though the dollar is entering more of a consolidation phase now. So there's quite an important area of support and resistance, which I'm now going to just quickly point out, which is probably going to be, the dollar's currently probing this area, and it's going to be a bit of a challenge for the dollar to break to the north of this zone. So this is, from the 9130s to around 9150. However, if the dollar does get above this area, well then, technically speaking, the door is open to a move, potentially even back towards this recent high from the end of last month, or the end of March / the beginning of April, above 93. Obviously, we'll talk fundamentals in a second. That would take a lot of things to go the dollar's way, fundamentally speaking, as well. So failing a break above this area, this important area of resistance, I think the area to the downside you want to be looking at is around the mid 9100s. As you can see, this has been an area back in, when was that? Mid-February, it was resistance, then it was support, and then more recently it's been support at the end of last month as well. So if we do fail to get above this area, I predict consolidation, to be honest, either side of the 91 handle, which is pretty much bang in the middle of this potential future range. So fundamentally, what's going on with the dollar at the moment? Well, the sell-off that we saw last month was, I think it's a bit odd, really, because, last month and the month before, markets become increasingly bullish about the US economy. Now, when this is the case, when markets are revising higher their forecasts for US economic growth, when US data is coming in really, really strong, as has been the case for most of the last sort of 2 months, usually the dollar responds well to that, because usually that strong data and optimism about the US economy has hawkish implications for Fed policy. So perhaps then the fact that the Fed remained as dovish as they did, remember we had the Fed meeting last week and they were super dovish, same dovish policy guidance, like no rate hikes into 2024 is what they're still guiding us with, and tapering of their asset purchase program still a very long way away. Maybe that's one of the factors keeping dollar on the back foot. Another factor is a lot of people have been talking about how, okay, in some emerging markets like India, and Brazil and other places, things have been getting worse because of, unfortunately, the coronavirus pandemic has been accelerating in these regions. But crucially for the DXY, because euro dollar makes up more than 50% of what drives the DXY, the situation in Europe has improved a lot. These European nations now looking at, they've got the spread of the virus seemingly under control, or at least the number of new infections isn't accelerating, and they're now talking about easing lockdowns, which is going to be good, obviously, for the Eurozone economy. So that seems to have helped euro at the expense of the dollar. But yeah, another factor is, this is probably the most important one in my mind, is the fact that last month US bond yields were under pressure. And that, again, like I was just saying with the dollar, is weird, because usually when you have all this economic optimism, that would put upwards pressure on yields. So given that, a lot of other analysts, and I'll be honest, me included, expect that, it's about time or soon US bond yields are probably going to start moving higher again, okay, because the US economic picture is just looking really, really good. This week we have some really important data. We already had ISM manufacturing, which wasn't as good as expected, but was still quite a strong report. We've got ISM services, and then crucially, we have the April labour market report, NFP, on Friday. And all of that data should paint a good picture of the US economy. And it's just, bond yields have got to move higher eventually. And when that does happen, you know, it depends how quickly that happens. The faster it happens, the more bullish that'll be for the dollar. But yeah, it should be a net dollar positive. And then that is potentially how you could see the DXY break above this area that I drew up and potentially move back to challenge those highs. But yeah, that's my thoughts on the DXYs, guys. I will see you all in the next video.